Hello, this is Imi from iTradeAIMS.net. Thank you for watching this video. Today I want to share with you a technique that you can use if you have a little bit of time but not too much. If you can't trade the 1 minute chart, but if you can spare like a few minutes every hour, then you can trade this method. I'm making this video for people who work from home and for people who have a little bit of time. Let's suppose they're running their own business or something like that, but they want to kind of trade intraday. They don't like swing trading. This is a method which we call the H1M5 method and combined with the banana method. So the numbers that you see, 1, 2, 3, is the banana indicator. It shows those signals, the rules for it. I'm making the video for my man Darren. Darren has the indicator. If you remember, you have the indicator. If not, you can just use the concept, which is the pullback concept. 1 candle up to 4 candle pullback. And the 4 rules is that you need to see an impulse move and you need to see a pullback. So the method I'm going to show you, all you need is to start at Frankfurt Open or London Open and look at the hourly chart. So the first thing you'll do, you can note this down. Let me change the details of this. Hold on a second. Should be 20. All right. Bring it a bit closer. So what I do is that I have the pound dollar, the euro dollar, the dollar yen, and then I have the DAX, the Dow, and the Nasdaq. So I'm not going to look at the US 30 and the US 100 during the Frankfurt Open. I'll wait for their respective opens. But in the morning, I can look at these 4 charts. Now, I actually do trade the German 30 on the 1 minute chart at the open as well, but that's not part of this strategy. So you want to go through your chart. I made a little video about this earlier. What you would do is that you'd look at the chart and you ask the question if it's in a trading range or is it trending. Now, I'm not going to say that if the dash line is below the solid line, then it's an uptrend and blah, blah, and all that. You need to know how to, there are other videos available on it. What is a trend? What is not a trend? You can visually see it. Like when you see a market like this, there was a trend on this day. But would you be able to tell if it was a trend over here? Probably not, because it depends on what you have to the left. So you want to just mark your swing highs and swing lows. So suppose you're on this day, and this is your highest high. It's kind of relevant to that as well. And then you have these 2 levels. So basic knowledge of support resistance and basic knowledge of how to identify a trend or a trading range is required. If you don't know, search my channel, or there are other channels who explains what is a trend and what is a trading range. But to be very quickly to explain that, in a downtrend you'll have a series of highs and lows and highs and lows, keep coming down like so. Let's go to a daily chart of dollar yen because there's a great example there. So as you can see here, over here you have this high, then you have this high. Now this high did not break this high, but it did create a new high, right? Then it comes down. This low does not break this low and price starts to go up, but this price action never broke that. So we can always mark this as a level that was never broken and it's swing. And then you have swing lows, but they never broke this low. So here you have an impulse move up, but then it's followed by sideways, which means that whichever side it breaks, that's going to be your trend. So here, that's the perfect example of the, I didn't plan it, but I know that dollar yen had this beautiful setup. This is a 10 by 10. So you want to see if the market is in trading range. So here, if you were trading the daily chart, suppose this daily chart is your say 5 minute chart or the hourly chart. You have this sideways identified, and then you want to see this impulse breakout. Look at this, 1, 2, 3, 4, 5 trend candles followed by a pullback, which is a retest of these levels. And when this retest happens, you have the dash line above the solid line. You have a 1 signal and then a 2 signal. It's a doji as well. It kind of tapers around here. It finds support and the formation of the candle changes. So here you have a very strong bear trend candle, but that is followed by another candle which is not a trend candle, because it has wick above, wick down. So basically candles are only two types. There is always a trend. There is either a trending candle or is it a trading range candle. So this is a bull trend candle. This is a bull trend candle. Why? Because the bodies are bigger. The wicks are smaller. This is a bear trend candle because the bodies are bigger. And the body big means that when price opened, that there's a big gap between open and the close, which means that there's a lot of activity that happened and price actually went down on that day. But the next day, the difference between open and close is not as high, and there's a lot of activity between these wicks. So that means that there is some slowing down happening up to this point where open and close are exactly the same. So what does it suggest? It's telling us that price has found support, which was previously resistance, and now it's turned into support. And that's a classic pattern which tells us that if we go long here, we can easily put a stop loss somewhere below this zone, because if the price goes down there, then we'll be proven wrong that our hypothesis was wrong. But in our case, we'll have a signal at 2, we will go long here and stop loss below this. And then what you do, you either have a 2R or a 3R. 1R means, you know, the range of your entry to your stop loss. So let's suppose it's 60. If it's a 2R, your target will be 120. 3R will be 180, and you know, as it goes. The best way would be to, if the market goes strong like this, just follow the dash line or the solid line. So if the dash line, you'll probably exit there or maybe here, and in the solid line you probably exit here, which should be more than 3R. So let's go to the hourly chart. So what you'll see, let's use today's examples, and we'll do yesterday's example as well. Probably. Okay, let's do this. So yesterday, what was going on the pound dollar? Well, the pound dollar had these two levels. So I will connect these two. You need at least two levels to consider a support. And remember, a support is only potentially a support. It's never like a concrete level. So you want to see what will happen around that area. And as you keep doing this, you will keep seeing those levels and you will keep updating them. So on day 1, you probably are empty, but on day 5 and day 10, you would have generated quite a lot of levels and you will follow them. But you don't want to follow like a 10 days old or a 20 days old level. You don't need that. What we need is this. So around here on that day, we see that it's a wide trading range, like 80 pips, which means that in between this trading range, we can trade. So what you would do is that if price is somewhere in the middle or around the highs, or if price is around the lows of this range, and then you see a trend candle, like in this case, you can drop to the 5-minute chart and find that setup. In this case, we have seen a setup on the hourly chart. So if you were trading the hourly time frame, you would take this. But this video is about finding setups where you can take trades on the 5-minute chart. So as soon as this breaks here, you have two options. If you're checking the chart only once an hour, then you will be checking this chart here, right? So let's mark that and see if there was anything on the 5-minute chart. Oh, let's actually bring that to, you see this little triangle? If I bring it here, price will go straight to that spot. Here we go. So we had a signal before it. So we have the impulse breakout, then we have the second one, and we have one signal here, which was not the best. But then there's, well, even if you took this, that's fine. You would have taken a rent, and then you would take this signal. So that's your second signal. And this one easily hit 2R, 3R, and all of that. And then after that, you have another signal here, right? So once the trend is confirmed, you can pursue that 5-minute chart and keep taking signal 1, 2, and 3, sometimes 4. All right, so that's what happens on that day. It was a very strong day, and then when we have a very strong day like this, there's a video that I uploaded earlier today. It's called the famous pattern. So this is the famous pattern, which means that on day 1, famous is the 2-day pattern. On day 1, you have a very strong move, and the next day there is a higher probability that that move will be followed. But there is one condition, that during the Asian session, price should have stayed in a very strong trading range. So what is this here? let me delete this and then I'll draw it again. So if you woke up and you saw the chart, this is Frankfurt Open, what do you see? You see this level connecting with this level. So I will take my box and I'll extend it here. So what's the next level? I have this level, but there's no other relevant level to it. So I'd rather have a level where there are 2 or 3 touches. So around here we have this. So once I see this, this is very easy for me now to say I'm not going to touch this chart until price breaks out of it. So if you're checking the chart once an hour again, then you would be engaging with this chart over there. So let's go to the 5-minute chart. And in this case, what you see is these are those levels, price breaks out of it. Now, if you had time and you had an alert here and you saw, and that's the question that Darren asked as well, do you set alerts? You can do that in this case because it's a famous setup. So in the famous setup, we know that it can break out here and it can continue. In fact, you can trade the famous setup by putting a pending order here and a 20 stop loss with a 40 target point. That's a strategy that has a 70% win rate on its own. Sam has been trading it for years and he used to double, triple his account with this, but needs discipline. So suppose you went to the 5-minute chart early like we did today, because I keep looking at it. There was the first opportunity to trade this. That's the seed with a gray one, so 2 signals. This is a simple gray signal, so I'm not going to take this one. This is red one. I will definitely take it, and Emma took this. It was a very nice 2-hour trade. You can take this as well. That's a very nice red one. Then we have 2, and I took this one. I had to stay through the sideways, and then it went and hit target point. So when you have 1, 2, 3 signal, that's it. You leave that chart alone. Let's go to the euro dollar as well. So euro dollar. So around here, what do you see? You have a trend candle, but you have identified levels to the left. You don't want to touch this. So next hour you check it again, right? You're working from home. You only have a few minutes, an hour. You check it again and you find out, okay, it's sort of right at the level or about to break it. So let's put a line there. Go to the 5-minute chart. And what do you see? Well, we have break here a few minutes later, and then it turns around and retests that. So that's the break and retest setup. In this case, it didn't really work well, but that's your setup. So you will take that trade with the 5 stop loss. It will go 5 in your favor and it will kick you out. And that's exactly what happened to my trade. But my trade was actually, I took it here. I got a bit aggressive. I got in early. Yeah, there you go. That was my trade. I got it here. Almost touched the 2R, but it came back and stopped me and then went and hit my 2R. So this happens as well. If I took it on the 15-minute chart, then probably the result would be the same, but I would have got a bit more. Now let's have a look at US indices, any of the index. So today, the US index, before this happened, today is NFP, right? You have this level and then you have internal levels. What happens when price starts to go up? In this case, it's kind of, we know that these indices are going up. It's a strong uptrend. So there's a higher chance of it going up. So let me go to the 5-minute chart, and there was this excellent signal. So around this time, after NFP, price broke, it pulled back, and we have 1, 2, 3, 4 perfect formation. This would be a beautiful setup one on the 1-minute chart. You take your signal. I actually took this trade, but it was just before Frankfurt Open. No, not Frankfurt, sorry. The New York Open, the New York Equities Open, right? The stock exchange, and it can usually go wild. So I took 1.5R on this. But if I had taken the plunge and allowed it to just run, but it's happened to me that, I tried to let it run, and then US opens and it slips and it takes away my profit and a loss and a bit more. So it could happen that I get stopped out here. So it's best to stay away from it. But if suppose you let it run, then in that case it was a 1:7. It's a 7% winner. And then when this happens, price moves very, very strong in the 5-minute, 200 points. Just leave it alone. There was another example on pound dollar, and I'm only using the examples that I have traded, and I have other people who can relate to it, like Emma in the chat room, that we traded it together, or we called it out. So in this case, look, we have a trading range. So we have levels that we can relate to, right? They're clear levels, price is going sideways, but in between that, towards the middle of this trading range, there's a very strong trend candle. So when that happens, I will mark this level, the previous swing, so that I'm playing with the inner swings now. I can also play with some of these levels, they can affect as well, previous levels. And then I will mark this candle. So suppose this is the end of the candle, right? I came to the chart, I looked at it, and I'm like, okay, it's cleared something. It's a very strong H1 candle. Let's drop to the 5-minute chart. I drop to the 5-minute chart, and what do I see? I see that it's moved down. So these last 12 candles will represent that H1 candle. And I have an impulse move. Back in the days when we had the AO and the eWave, I would have called this a wave 3 at that time, right? And then we wait for the pullback. In this case, it pulls back a little bit more. In that case, then I want to wait for one more impulse of that time frame. So in this time frame, I see an impulse move down, right? Now I know that sometimes if you're only checking the 1-hour chart, you only have this much time. You will have to give it a few more minutes, or once the situation is there, like for example, you see an impulse move, then you would have to find that time to come back to it. Otherwise, you'll have to go to the 15-minute chart and do it that way. In that case, suppose you saw an impulse move, then you become alert to this situation, and let's go to the 15-minute chart. So the hourly chart, you drop to the 5-minute or the 15-minute. Both time frames are available to you. When it's moving very fast, the 5-minute chart is going to be beneficial. Otherwise, the 15-minute chart. In this case, the 15-minute chart produced the perfect setup. So let's go back to the hourly and drop to the 5-minute. So in this case, I have this. And once the trend is confirmed, then I have space between here to this level. Let's use the blue zone, right? All the way here. And once price comes to that level, then I want to wait to see if it breaks it. We have other videos on this day. We traded this. So that's one. If you caught that, fine. Otherwise, you have this signal. After that, you have this signal. On this signal, you have the flat base on this, which is also very good. So you want to go below the base, stop loss up there. So that's about 15 stop loss. Your target would be somewhere here, 1 hour in this case, because support is there. But guess what happens? It breaks the support, retests it over here. Now it does not give you a signal. If this was a signal, that would be very nice. That's the break and retest. There's a very nice situation on the euro dollar the other day, and this repeats itself. So let's suppose you're here watching this market. It's euro dollar going sideways. You have a very clear trading range. You know that this trading range is, let's say, it's profound, because it's very clear. You have 2 levels here, you have 2 or 3 levels here, and then you want to wait for the breakout. Don't go for breakouts just by buying and selling, because if you just sold here, you pay the rent. If you sold here, you pay the rent. You want the candle to close outside the range. In this case, it was here, it closed outside, and there is little wick. So you drop to the 5-minute chart. This was a beautiful setup, a very, very beautiful setup. I actually did not take it. Emma took it for a nice 2R. So if you look at this, it goes up, pulls back, retest that previous level, which is this one, or its own levels, and you have 1, 2, 3. You have the seed signal, a very, very, very small, tiny signal, 8 stop loss. You could have taken, 20, 24 for a 3R, 32 for a 4R, all of that was available, or just trailed the dash line and then you got 34. That's like 4% profit on one signal. So that's all you have to do, and wait for these type of setups. Trading range breaks out, break and retest, and then when there's another trend candle like here, in this case there will be no setup because there's no wick, so price did not move. So let's go back to the 5-minute. You see there's nothing. But after that, if you had the time and you watched it, then you had one more entry. But I'd rather do entry around here, like, you know, this is your first pullback, that's your second pullback. That's a little bit too late now, because you see it's moved 90 pips. That's far more than its average true range or the average daily range of this pair. So you want to let go of it. And the other thing you want to incorporate is to actually pay attention to the market cycle. So around here you have a breakout, that's your first pullback, and then you have another breakout, and that's another pullback. And after that, guess what happened? It has turned into a channel, a wedge, and then it's towards the end of the day, so you want to leave it anyway. So that's the H1M5 methodology. It's very powerful if you want to do it that way. Otherwise, if you just simply, if you don't have time and you only have that 1 minute every hour, then what you can do is to trade signals like these. You wait for the signal, you wait for this little impulse move, and then you take the signal and put 2R or 3R target point, and or, you know, trail the AIMS boxes. If you have the ATM, if you don't have the ATM, just trail the solid line. So like euro dollar would have given you this signal, this one here. This was a very good signal. Suppose you took this one, 10 pip stop loss, and then you trail the, you know, dash line. You got yourself 85 pips, or if you were awake or if you were available, then you saw that it moved really, really fast and really strong. You trail your candles and you got yourself a 9.5% winner. So there you go.